Texas Instruments has not made a large acquisition recently. Thanks, GPT-3. You can see the cycles? Exactly. It's a cyclical business. That's the nature of semis. An investment of just $6 billion. Just in 9 months, Texas Instruments made more than that. Yeah, that's crazy. 53% margins. Woo. And I thought the pharma industry had good cash flows. Maybe I should be semiconductor bro. It's just amazing how much revenue they can generate with such a small footprint. I think Texas Instruments probably gets a quote-unquote premium because they're so diverse and they're so less risky. So maybe their discount rate should be a little bit lower than, say, an NVIDIA. Capital structures, they certainly vary from firm to firm, and I do keep it different for different kinds of companies. But for companies like Salesforce and Microsoft, they're basically the same, right? The risk to the cash flow is kind of what you're trying to embody, in my opinion. And cost of capital isn't really the answer for that, in my opinion. All right, so we got Texas Instruments over here. I don't really look at Texas Instruments too much. I've looked at it in years. $170 stock. But that is meaningless unless we know how many shares outstanding there are, right? All right, Texas Instruments, let's go. 150 billion market cap. They have 900 million shares outstanding. So Texas makes a lot of these, they call them chips, integrated circuits. A lot of for telecommunications and automobiles, if I'm not mistaken. I haven't looked at their end markets in a while. Wow, look at these margins. Holy moly. This reminds me of Apple. Whew. This is better than me looking at a photo of a centerfold in Sports Illustrated. I see that every day in real life. But when I see this, I don't see this every day. Ooh, this. Yeah, it's hot in here. These are some margins. We got 70% gross margin, 51% operating margin. I can't contain myself. Isn't that crazy? They basically have no operating expenses. I almost can't believe that. I think partially it's probably peak cycle semiconductors. It's too good to be true. There's nothing to conclude just yet. It's just breathtaking how much money these guys are making. It almost feels like I want to start a semiconductor company. Yeah, that's crazy. 53% margins. Woo. How many companies have that? Not even Apple. How many S&P 500 companies have a 53% operating margin? Oh, if you guys want to try the Gödel beta, that's a software that I built that you see on my screen. The Christmas lights. You're welcome to try it. I'd really appreciate it. We're just starting out, so it's in an early beta. So you're more than welcome to try it out, but we still have a lot of improvements to make. And not all the features work 100% yet. So that margin might have something to do with the chip shortage. Yes, I think it's probably not sustainable. I don't know how you can sustain 53% operating margins. The end goal for the software is to beat Bloomberg. Yes, NPC 3000. That it is the resurrection of that software. But it still takes a while to update everything and get it all working. Yeah, we have some job postings. We just posted a job posting today, actually. Anyway, you apply for the beta with that link. This is Texas Instruments we're looking at. People know it as a calculator company, but it's really a digital signal processing company. Let's go keep looking at their SEC filings. Here's their balance sheet for the September quarter. All right, so they basically have no net cash, which is, fine, normal. Interestingly, they have $6 billion of property, plant, and equipment. So you could recreate Texas Instruments with $6.5 billion, at least all the facilities, right? And with just an investment of just $6 billion, right? $6.5 billion of equipment. Just in 9 months, Texas Instruments made more than that in cash. Isn't that crazy? And as exotic as chip making is, it's not that hard. You can copy what Texas Instruments is doing, right? I'd love to make double my money in 1 year. We just looked at Salesforce.com where it would take 20 years to get your money back. So whatever Texas Instruments is doing is kind of incredible. And this is the way Buffett sort of looks at stocks, which people don't understand. He talks about it, but people never talk about it. They want something simpler. You don't have to buy $6.5 billion of capital equipment. Maybe you recreate 1% of Texas Instruments with $65 million, right? You look at the very best part of Texas Instruments and you say, I'm just going to copy that part. It's super profitable. The whole company's profitable, but that part's super profitable. And you put down $65 million. You'd probably turn that to $650 million instantaneously. But you have to know semiconductors, and they also have something that you don't have, which is a brand, a customer list, relationships. That's why capital is just one part of the equation. But it is amazing how well they're doing without much capital. They are a very diverse company. They make digital signal processors for everything, for telephones, automobiles, anything electronic basically that requires kind of a DSP. I think they do analog too. So any camera I think has a Texas Instruments chip in it somewhere. So it looks like cash flow and net income for Texas is actually pretty similar. But let's go back to Q2, I guess. I want to go back to maybe Q1, but it doesn't matter. We do either way. See, the fabs, yeah, I mean, Texas doesn't make memory. They don't make any of the super commodity stuff, from what I understand. But I'm not a chip guy, so what do I know, you know? They're chip people who just do semis, right? Semiconductor analysts for life. They're people they're in the semiconductor industry. They know, you know, I'm not. Pharma software, I know. Semiconductors, no. Niet. I know finance, I can look at a stock, but to really know an industry, you have to eat, breathe, and sleep it, you know? Like you have to be going to every conference, talking to every player. You got to be so into it. That's all you care about is digital signal processing. It's just amazing how much revenue they can generate with such a small footprint. I think part of it is they have their customers. They don't really need to market to them. Their customers know exactly where to get the chips from. You know, they're kind of like buy or leave. You buy or leave. They just send a catalog every year to their customers. All right, here's cash flow. I'm just going to do 2 lines for the cash flow statement. Yeah, so I mean, the boom-bust cycle of cyclical industries like semiconductors, but also other things like paper and stuff like that. Basically, as business gets better, you know, you have this big CapEx. Oh, was that 10? Okay, yeah. You have this big CapEx increase because the company's like, man, we're making so much money. Let's make more facilities and more plants. And every company does that, and then guess what? They have too many plants, they have too many chips, prices go down, and business goes the other direction. You know, so usually in the good economy, it exacerbates that. There's a little extra demand because the economy is good. So they think business is really great. And then when the opposite happens, then they're like, oh man, we built too much. So it's boom and bust, boom and bust. You know, that's kind of the nature of the semiconductor industry. It is a cyclical industry. We tend to forget that. We were talking about NVIDIA the other day. When you see the growth going up and up and up, you say, oh man, this is never going to end. You know, and then it ends. And, you know, Texas has been through a lot of these cycles. Some of these other companies have been through less, so they probably kind of understand the best way to manage this low-cost footprint. But anyway, look at free cash flow. $1.6 billion a quarter on average here, $1.7 billion a quarter on average a year ago, which makes you wonder. So $153 billion. So let's say they're going to do $6 billion in cash flow. Kind of seems overvalued because we're at a cyclical peak. Like 20 something times earnings for a cyclical peak doesn't sound good to me. But caveat emptor, I have to look at the Q4 and a few other numbers before I have a final answer. And that's just a preliminary answer, right? I've spent an hour or two on Texas Instruments. Is the first couple hours I spent on Texas in years. So really not, you know, that meaningful regardless. Okay, so here's their analog business is $14 billion, which is, I want to say about half their revenue, maybe more. So it's still a big analog shop. So for analog, you're talking about taking something from the real world, right, and processing it into a digital signal. So camera is a really good example, where a camera grabs pixel information, or light information, really, light information spectrum from the real world, and turns it into some digital, pixel basically, or digital form. So that's sort of the way, that's sort of an example of the kind of chips that Texas makes. 77% of revenue. Then they do power, and I'm guessing power and stuff like that are less profitable. The business, 41% is industrial, so 21% automotive, and electronics are only 24%. I would have thought that would have been more. But when they say industrial, they're talking about all kinds of stuff. Really diverse. Factories, buildings, power grid infrastructure, medical, interesting. Aerospace and defense, I'm assuming your average airplane is full of Texas Instruments chips. It's T&M. I think they have a chip for basically everything. 100,000 customers. Woo. 31,000 employees. Very interesting company, legendary American company. One of the most revered, successful American companies. To me, I think of American business and I think of Texas Instruments. Miracle. That's miracle. You don't like it? Get out. So they had a 27% growth rate in 21. There had to be is there an acquisition there? Could they have done an acquisition? We'll look in a second. Again, with these cash flows, they're so tantalizing. And I thought the pharma industry had good cash flows. Maybe I should be semiconductor bro. All right, let's look at a couple more years. Texas has had 40% operating margins before recently. Now they're doing 50s, which is so wild. Oh yeah, I was supposed to check for acquisitions. I should ask GPT, what do you think? Texas Instruments has not made a large acquisition recently. Thanks, GPT-3. All right, so you can see the revenue. This is weird. Let's see here. Revenue, 15,784, 14,961, 13,370. 13,000, 13,045. Fidel cash flow. All right, so this picture of Texas Instruments makes it look very different, right? You see that? This looks more like a semiconductor company. You can see that unlike Salesforce and these other growth companies, for 6-7 years here, they barely grew revenue at all. Barely at all. And I'm suspicious of that growth year. I wonder if that was acquisition driven. You got to take a look. ChatGPT said no, but ChatGPT is only trained until a certain time. Doesn't get really recent deals. It doesn't look like they did too much on the acquisition side. Yeah, it doesn't seem like it. Looks like ChatGPT was right. They don't even mention acquisition too often in here. I'm double checking my numbers because I want to make sure. Yeah, it looks like not much growth. So what would you pay to make $7 billion a year? You can see the cycles. Exactly. It's a cyclical business. That's the nature of semis. Rohan can see it. He sees the numbers and a bunch of calculations go off in his head. I see it. Acquisition cause a domino effect? Sometimes. It's one of those things that's hard to tell. A lot of people say, these acquisitions come in threes. These major acquisitions. I don't know. I doubt that. But you do get the sense that some of these companies panic when they're like, we got to do something strategic, All right, so I think you can look, this is where finance really shines, quite frankly. As you look at Texas Instruments, you basically look at their earnings like a bond. I mean, it's better than a bond, obviously, because ideally it's growing over time, but this is a steady earnings stream, as steady as something stochastic will get. You're looking at pretty reliable bond-like income, right? It's growing, but if we go back a little bit, the cycles might be even more apparent. Here's the real free cash flow. So you got 3.8, 4.1, 4.7, 6.1, 5.8, and then two more numbers here. So you basically get, on average, call it $5 billion a year. What's $5 billion a year worth? I don't know, 100 bill? What's the market cap? 150 bill. It's probably going to be more than 5 billion. That's why the market cap's up so much. In the recent years, they were doing quite a bit more than that. But the recent years are also peak years, right? Semis are in a peak right now, cyclical peak. We hope the economy goes up forever, but we know it doesn't. We know there are such things as recessions, and semiconductor companies do the worst in recessions. They can actually lose money in recessions. So you kind of have to average out the good years and the bad years. You can't just look at the good years, which is what most people kind of want to do, especially in bull markets. So now we can go back even a little further, and you can see like what a lot of people would say, like they're a quote-unquote cyclical growth company, which is kind of a misnomer or whatever, an oxymoron. All right, so we got a couple more years of revenue, and you can see they really have not grown, right? They were stuck in this $13 billion range. They finally kind of poked their head above into 18 billion. But look at, if you were an investor in this company in 2011, and they told you that in 2020, revenue would basically be the same, maybe 5% higher, what would you say? No way, right? We're at the center of the semiconductor industry. We have to be able to find some way to grow better than that. Nope, just something to think about. I'm not paying 20 times earnings for peak cycle cash flow. This looks like a short. I hate to say it. Yeah, crypto mining is not a big factor for semiconductors. It's a big industry. It's a big factor for ASIC makers, I'll say that, but these guys don't even make ASICs. All right, I'm trying to go back to like when they had when there was a big recession. All right, so we've gone back a while for Texas. All right, here's the Great Recession, right? Look at how the revenue of Texas behaved. Went from $12.5 billion in 2008 to their worst year in decades, or at least in the last decade, of $10 billion. Then it shot up to $14 billion. It's kind of been consistent since then. Very interesting, isn't it? What's really interesting is look at the R&D and SG&A they had these years, right? And they're able to chop that down quite a bit, sort of more efficient business. Let me look back one more year. And look at that. In 2007, they had 13,835. Isn't that interesting? This is what a cyclical company looks like, right? 14 billion, economy's in recession, it goes to 12.5 billion and then 10 billion. After years of growth, you're like, oh, how could revenue drop 40%? Well, it does. Then recession's over, revenue's back. Semiconductor glut, one-time revenue boom. But in general, it's way too expensive. 150 billion for 5 billion a year, I think very, very expensive if you ask me. But again, that's a cursory observation, and you should take cursory observations with a grain of salt. Nobody can do a huge amount of homework on a stock very quickly and come up with a great, really informed opinion. No matter what you see on TV or what you hear, it's not easy, and even great investors are wrong quite a bit. I think Texas Instruments probably gets a quote-unquote premium because they're so diverse and they're so less risky, so maybe their discount rate should be a little bit lower than, say, an NVIDIA. They've been around longer, they have a lot more customers, they